Varonis Systems Inc. is VRNS. Varonis Systems is a cybersecurity vendor focused on data privacy and security. The firm is currently undergoing a cloud transition as it weans its on-premises customers over to its cloud products that are delivered as software as a service. The New York-based firm was founded in 2004 and went public in 2014.
Varonis Systems Inc. is VRNS. The stock of Varonis Systems Inc. NASDAQ VRS is experiencing an upward trend. Several factors contribute to this positive performance. 1. Strong financial guidance. Varonis Systems recently updated its fourth quarter earnings guidance, projecting higher earnings per share (EPS) of 22 to 24 cents compared to the consensus estimate of 18 cents. This positive guidance indicates potential growth in company performance. 2. Expansion of AI capabilities. Varonis Systems is expanding its artificial intelligence, AI, and machine learning capabilities with the launch of Athena AI, a new generative AI layer. This demonstrates the company's commitment to innovation and could attract investors looking for tech-driven companies. 3. Analyst support. Research firms such as William Blair and Wedbush have raised their FY 2023 earnings estimates for Varonis Systems, indicating confidence in the company's future prospects. Additionally, MarketBeat Ratings reports that the stock has received an average rating of moderate buy from analysts, suggesting positive sentiment. These factors combined provide investors with favorable expectations for Varonis Systems Inc.'s growth potential, contributing to the upward movement of its stock.
Varonis Systems Inc. is VRNS. The stock of Varonis Systems Inc. VRNS is potentially going up for several reasons. 1. Expansion of AI and machine learning capabilities. Varonis has announced the addition of Athena AI, a new generative AI layer, to its data security platform. This enhancement is likely to attract investors who recognize the value of AI technology in the data security industry. 2. Participation in upcoming conferences. Varonis Systems is participating in upcoming conferences, which suggests that the company is actively engaging with industry leaders and potential clients. Such participation can boost investor confidence and lead to an increase in the stock price. 3. Momentum investor interest. Varonis Systems has been identified as a potential top stock pick for momentum investors. This indicates that the stock is gaining attention from investors who seek to capitalize on short-term price trends. 4. Analyst ratings and price targets. Several analysts have given positive ratings to Varonis Systems, with an average price target of $37, implying a potential upside. Investors may be optimistic about the company's future performance based on these ratings. 5. Enhancements to Microsoft 365 offering. Varonis has announced significant improvements to its Microsoft 365 offering, providing more robust capabilities to detect and prevent exposures. This development might attract investors who are interested in cybersecurity solutions for cloud-based platforms. These factors, including the expansion of AI capabilities, participation in conferences, positive analyst ratings, momentum investor interest, and enhancements to their product offerings, contribute to the potential increase in Varonis Systems stock price.
Globant SA is Globe. Globant is a next-generation IT services company that primarily assists clients with their digital transformation efforts by creating customized software for them. The company was founded in 2003 in Argentina, but is currently headquartered in Luxembourg and primarily serves clients in the US and Latin America. Globant's client base is relatively concentrated in the media and entertainment and financial services industries.
Globant SA is Globe. Globant SA and stock is experiencing an uptrend due to several reasons. Firstly, the company's rapid growth and recognition in the industry have contributed to investor optimism. Globant has been acknowledged in Fortune's 100 fastest-growing companies, highlighting its ability to address complex digital transformations in an ever-changing market. Furthermore, the announcement of Globant's third-quarter financial results has also garnered attention. Investors anticipate positive numbers, which has driven up the stock price. Additionally, an analyst upgrade from Piper Sandler, raising their price target on the stock, has further fueled investor confidence. This upgrade indicates positive sentiment and growth prospects for the company. Overall, the combination of Globant's industry recognition, upcoming financial results and positive analyst outlook has contributed to the upward movement of the company's stock.
Globant SA is Globe. Globant SA, NYSE Globe, saw its stock price rise after reporting better than expected third quarter results. The company posted adjusted earnings of 1.8 per share, surpassing market estimates, and reported quarterly sales slightly above expectations. Additionally, KeyBank maintained its overweight rating on Globant, but lowered its price target, suggesting continued positive sentiment from analysts. As a software technology developer, Globant creates platforms powered by digital technology, offering various software products and mobile apps to help its clients understand consumer behavior. The company's strong performance and positive analyst outlook likely contributed to the stock's upward movement.
Cencora Inc. is core. Cencora is one of 3 domestic leading pharmaceutical wholesalers. It sources and distributes branded, generic, and specialty pharmaceutical products to pharmacies, retail chains, independent and mail order, hospital networks, and healthcare providers. It and McKesson and Cardinal Health constitute over 90% of the U.S. pharmaceutical wholesale industry. Cencora also provides commercialization services for manufacturers of pharmaceuticals and medical devices, global specialty drug logistics, World Courier, and animal health product distribution, MWI Animal Health. Cencora expanded its international presence in 2021 by purchasing Alliance Healthcare, one of the leading drug wholesalers in Europe.
Cencora Inc. is COR. The stock of Cencora Inc. SSCOR has been rising due to various factors. Firstly, Genios Wealth Management Inc. has increased its holdings in the company by 42.2% during the second quarter. This suggests a positive sentiment towards Cencora Inc. and indicates confidence in its future prospects. Additionally, Principal Financial Group Inc. has raised its holdings in the company by 29.9% during the same period, further contributing to the stock's upward movement. This signifies institutional investor interest in Cencora Inc. Furthermore, Montag A. and Associates Inc. has boosted its position in Cencora Inc. by 62.7% in the second quarter, indicating growing confidence in the company's performance. Overall, the increase in investment and stake purchases by wealth management firms and institutional investors suggests that there is positive sentiment surrounding Cencora Inc., which may be contributing to the stock's rising value.
Cencora Inc. is COR. The stock of Cencora Inc. is going up due to its robust performance in the U.S. healthcare solutions segment. The company is gaining traction in this sector, which is contributing to its upward trend. Q. What is the product name of Ingersoll Rand Inc., ticker IR? Ingersoll Rand Inc. offers a range of products including impact wrenches, air starters, cordless tools, ratchet wrenches, grinders, sanders, polishers and buffers, cutting tools, and needle scalers and chisels. Q. What does Ingersoll Rand Inc. IR sell? Ingersoll Rand Inc. manufactures and markets a range of compressor, pump, vacuum, and blower products. What do the products from Ingersoll Rand Inc. do? A. The products from Ingersoll Rand Inc. IR serve various purposes depending on the specific product. However, in general, they are designed to compress, pump, vacuum, or blow air or fluids depending on the requirements. Q. Why are Ingersoll Rand Inc. IR products special? A. Ingersoll Rand Inc. has built a reputation for durability and reliability with their compressor products. Customers highly value these qualities in their products, leading to positive reviews. Q. What is the review of Ingersoll Rand Inc. IR products? A. According to a shop review, the air compressors from Ingersoll Rand Inc. IR are highly regarded. The high pressure of up to 175 psi is appreciated, although users have to regulate it for typical tools. Q. What is Ingersoll Rand Inc. IR about? A. Ingersoll Rand Inc. IR is a global market leader known for its innovative and mission-critical air, fluid, energy, and medical technologies. The company provides services and solutions aimed at increasing industrial productivity and efficiency. Q. In which industry is Ingersoll Rand Inc. IR operating? A. Ingersoll Rand Inc. IR, formerly known as Gardner Denver Holdings Inc., operates in the industrial equipment industry. The company specializes in mission-critical flow control and compression equipment, along with related aftermarket parts, consumables, and services. Q. Who are the competitors of Ingersoll Rand Inc. IR? A. The main competitors of Ingersoll Rand Inc. IR include IDEX, Donaldson, DCI, Regal Rexnord, RRX, Equifax, United Rentals, URI, Waste Connections, DCN, L3 Harris Technology, GEX, AirCap, RB Global, RBA, and Lincoln Electric, LECO. Whether someone should buy Ingersoll Rand stock or its competitors depends on their individual investment strategy and analysis.
Ingersoll Rand Inc. Common stock is IR. Ingersoll Rand was formed through the merger of Gardner Denver and Ingersoll Rand's industrial segment. The firm's portfolio consists of two business lines: industrial technologies and services, and precision and science technologies. Ingersoll Rand serves a variety of end markets, including industrial, medical, and energy. Its broad portfolio of products includes compression, blower and vacuum, and fluid management. Ingersoll Rand generated roughly $5.9 billion in revenue in 2022.
Ingersoll Rand Inc. Common stock is IR. The stock of Ingersoll Rand Inc. IR is experiencing an upward trend for several reasons. Firstly, the company reported record third-quarter results, including strong orders of $1,638 million, driven by its competitive differentiator, Ingersoll Rand Execution Excellence. This performance has led to increased confidence in the company's growth prospects. Additionally, Ingersoll Rand raised its total company guidance, including organic revenue growth, which has attracted positive attention from investors. The company's competitive positioning, combined with higher pricing, has contributed to improved profitability and increased earnings. Furthermore, several institutional investors, such as JPMorgan Chase & Co. and TD Asset Management, Inc., have reduced their stake in Ingersoll Rand, indicating a positive market sentiment towards the stock. Overall, the company's strong financial performance, increased guidance, and positive market sentiment have contributed to the upward movement of Ingersoll Rand Inc.'s stock.
Ingersoll Rand Inc. Common stock is IR. Ingersoll Rand is experiencing positive momentum and upward movement in its stock price due to several factors. The company has a strong and expanding product portfolio, which positions it well for growth despite challenges from cost inflation and weakness in the life sciences business. Ingersoll Rand's Q3 results showcased higher revenues in its industrial technologies segment, leading to an increase in its adjusted earnings guidance for 2023. Moreover, the company's financial performance surpassed Wall Street estimates, indicating its ability to outperform expectations. These factors contribute to the upward trajectory of Ingersoll Rand's stock.
W. R. Berkley Corporation is WRB. W. R. Berkley is an insurance holding company with a host of subsidiaries that primarily underwrite commercial casualty insurance. The firm specializes in niche products that include various excess and surplus lines, workers' compensation insurance, self-insurance consulting, reinsurance, and regional commercial lines for small and mid-sized businesses.
W. R. Berkley Corporation is WRB. The provided news articles do not mention anything about the reasons for the increase in W stock. Therefore, I cannot provide a summary based on that information.
W. R. Berkley Corporation is WRB. The stock of W. R. Berkley, WRB, is expected to rise due to several factors. Firstly, the company has reported positive earnings, indicating strong financial performance. Additionally, WRB benefits from high retention rates, which implies strong customer loyalty and a stable business. Furthermore, the company is experiencing growth in exposure, expanding its market reach and potential. Moreover, WRB demonstrates effective capital deployment, which contributes to its profitability. Overall, these factors suggest that WRB has a favorable outlook and could lead to an increase in its stock price.
Lennox International Inc. is LII. Lennox International manufactures and distributes heating, ventilating, air conditioning, and refrigeration products to replacement 75% of sales and new construction 25% of sales markets. In fiscal 2022, residential HVAC was 68% of sales, commercial HVAC was 19%, and refrigeration accounted for the remaining 13% of sales. The company goes to market with multiple brands, but Lennox is the company's flagship HVAC brand. The Texas-based company will be focused on North America after the sale of its European HVAC and refrigeration businesses in late 2023.
Lennox International Inc. is LIE. Lennox International Inc. has seen its stock price rise due to several factors. Firstly, the company reported stronger than expected earnings, which has positively influenced investor sentiment. Secondly, Lennox International has provided positive earnings guidance for the future, which has boosted confidence in the company's performance. Additionally, the decline in short interest in the stock indicates that investors are becoming less bearish, further contributing to the upward movement in the stock price. These factors have collectively contributed to the increase in Lennox International Inc. stock price.
Lennox International Inc. is LII. Lennox International LII has been recording gains and is currently at a 52-week high. The stock's positive momentum can be attributed to its strong fundamentals. While it is not explicitly mentioned in the provided text, we can infer that the company's financial performance and prospects have likely impressed investors, leading to the upward movement in the stock price. Additionally, it's worth noting that the article mentions Lennox International Inc. in relation to potential gains in the future, further indicating positive sentiment surrounding the stock.
Leidos Holdings Inc. is LDOS. Leidos Holdings Inc. is a technology, engineering, and science company that provides services and solutions in the defense, intelligence, civil, and health markets, both domestically and internationally. Company customer includes the U.S. Department of Defense, DoD, the U.S. Intelligence Community, the U.S. Department of Homeland Security, DHS, the Federal Aviation Administration, FAA, the Department of Veterans Affairs, VA, and many other U.S. civilian, state, and local government agencies, etc. The company is engaged in 3 reportable segments: Defense Solutions, Civil, and Health. Defense Solutions provides leading-edge and technologically advanced services, solutions, and products to a broad customer base. It generates key revenue from Defense Solutions.
Leidos Holdings Inc. is LDOS. The news articles do not provide specific information about why the stock of Leidos Holdings Inc. is going up. However, there are some relevant details that might be influencing the stock's performance. 1. Cash dividend. Leidos Holdings Inc. declared a quarterly cash dividend of 38 cents per outstanding share, which is a $0.02 increase from the previous dividend. This announcement indicates the company's confidence in its financial position and could attract investors. 2. Q3 financial results. Leidos Holdings Inc. reported third quarter fiscal year 2023 results, showing a 9% year-over-year increase in revenues. However, the company also reported a net loss of $396 million. The market's response to the revenue growth and the company's overall performance could impact the stock price. 3. Institutional investments. Several institutional investors, including Foster & Motley Inc., Lincoln National Corp., Machina Capital SAS, and Canada Pension Plan Investment Board, have increased or maintained their holdings in Leidos Holdings Inc. This indicates confidence and interest in the company among large investors, potentially influencing the stock's upward movement. It is important to note that this analysis is based on limited news articles, and further research should be conducted to understand the comprehensive factors contributing to the stock's performance.
Leidos Holdings Inc. is LDOS. Leidos Holdings Inc., LDOS, has received bullish ratings from analysts in the past quarter. Additionally, 5 analysts have provided 12-month price targets for LDOS, with an average target of $120.02 and a high of $125. This positive sentiment and price targets indicate that there may be expectations for the LDOS stock to increase in value.
The Ensign Group Inc. is ENSG. Ensign Group Inc. provides post-acute healthcare services in the United States. Its regional subsidiaries oversee skilled nursing, assisted living, home health and hospice, mobile ancillary, and urgent care operations. Medicare and Medicaid programs contribute a majority of revenue received for Ensign's services. The firm operates through 2 segments, skilled services and standard bearer. The skilled services segment includes the operation of skilled nursing facilities and rehabilitation therapy services. The real estate segment comprises of properties owned by the company and leased to skilled nursing and assisted living operations. The majority of the revenue is generated from the services segment.
The Ensign Group Inc. is ENSG. Based on the information provided, it is not explicitly mentioned why the Ensign Group Inc. stock is going up. However, there are several positive factors that could potentially contribute to the stock's increase. 1. Earnings beat. The company reported earnings per share EPS of 1.10 cents for the quarter, surpassing the consensus estimate of $1.09 by GALT1. This positive earnings surprise may have instilled confidence in investors and led to an increase in the stock price. 2. Revenue growth. The Ensign Group generated $940.79 million in revenue during the quarter. The strong revenue performance indicates that the company's business is growing and could have positively impacted the stock price. 3. Acquisitions. The company recently acquired a post-acute care campus in Texas, indicating its expansion efforts. Such acquisitions can enhance the company's market presence and potentially lead to increased investor interest and stock price appreciation. 4. Investor confidence. While specific reasons are not mentioned, various institutional investment firms, including Los Angeles Capital Management LLC, Gagnon Securities LLC, Capital Square LLC, and Bridge City Capital LLC, have reduced their positions or sold shares of the Ensign Group. This suggests that these investors may have had a positive outlook on the stock. It is important to note that the given information only provides a snapshot of the Ensign Group's recent activities. It is recommended to conduct further research and analysis to gain a comprehensive understanding of the factors influencing the stock's increase.
The Ensign Group Inc. is ENSG. The Ensign Group Inc. stock, ENSG, is reportedly going up due to positive earnings estimates. The company reported earnings 30 days ago, and analysts are predicting strong future performance. Additionally, the Zacks Style scores indicate that the stock has strong market-beating potential. These factors suggest that investors are optimistic about the company's growth prospects, leading to the stock's increase.
Welcome back to our financial news segment. Today, we have some interesting updates on a few healthcare stocks. Ensign Group reported their earnings a month ago, and now investors are eager to know what's next for the stock.
That's right, Jim. Ensign Group is a healthcare company, and their earnings report can give us some clues about its future performance. But we need to look at earnings estimates to get a clearer picture.
Thanks for that, Kelly. And that wraps up our summary of today's news. Thanks for joining us, and we'll see you tomorrow for more updates. Absolutely, Kelly. And speaking of healthcare stocks, there's also news about the Healthcare Sector ETF, PSCH. We'll discuss that in a moment. But first, let's talk about how to pick strong stocks using the Zacks Style scores.
That's an interesting topic, Jim. The Zacks Style scores provide a great tool for investors to choose market-beating stocks for their portfolios. It's always good to have a systematic approach when it comes to stock selection.
Definitely, Kelly. Moving on, we have some news about Henry Schein. Their third quarter performance in 2023 showed remarkable sales growth, especially in the technology and value-added service businesses.
That's encouraging news for Henry Schein, Jim. Sales growth in those areas can indicate a healthy business and potential for future success. Now, let's turn our attention to National Vision.
Right, Kelly. National Vision's third quarter results revealed higher SG&A expenses due to increases in performance-based incentives and stock-based compensations.
That's something investors should take note of, Jim. Higher expenses can impact a company's profitability and ultimately affect the stock's performance.
Absolutely, Kelly. These updates provide valuable insights for investors, allowing them to make informed decisions about their portfolios.
That's right, Jim. It's crucial to stay informed about the latest news and developments in the financial world. That's all for today's segment. Join us next time for more financial news analysis.
Blue Owl Capital Corporation is OBDC. Blue Owl Capital Corp is a specialty finance company and business development company, BDC, focused on providing direct lending solutions to U.S. middle-market companies. The company seeks to generate current income and, to a lesser extent, capital appreciation by targeting investment opportunities with favorable risk-adjusted returns, including senior secured, subordinated, or mezzanine loans and equity-related instruments. Its investment strategy is intended to generate favorable returns across credit cycles with an emphasis on preserving capital.
Blue Owl Capital Corporation is OBDC. Blue Owl Capital Corporation's stock has been on the rise due to several positive factors. Firstly, the company reported strong financial results for the third quarter, with a net investment income per share of 49 cents and a net asset value per share of $15.40. This indicates healthy profitability and the company's ability to generate value for its shareholders. Additionally, Blue Owl Capital announced an increase in its quarterly dividend. which is always a positive signal to investors. The dividend increase shows the company's confidence in its financial strength and its commitment to returning value to shareholders. Furthermore, the stock reached a new 12-month high, indicating strong investor interest and optimism. This positive momentum could be attributed to the company's solid financial performance and positive market sentiment. In summary, Blue Owl Capital Corporation's stock is going up due to its strong financial results, increased dividend, and positive market sentiment.
Blue Owl Capital Corporation is OBDC. The Blue Owl Capital Corporation stock, OBDC, is going up due to its strong performance, as it has delivered a plus 3.6% total net asset value, NA return in Q3. This positive performance is likely attributed to the company's focus on income portfolios and its status as a blue-chip investment-grade business development company, BDC. Investors should consider OBDC stock as a buy in their portfolios.
Good evening, Kelly. Today we have some interesting news for investors looking for stable stocks. The Ben Graham formula strategy seems to be the way to go, as it focuses on ultra-stable stocks that are unlikely to lose money over a long period of time. This is great news for those who value long-term investment stability.
Absolutely, Jim. And if you're someone who wants to generate income from your investments, there's another strategy you might be interested in. Take a look at this portfolio that is specifically designed to produce high levels of income now and in the future. It's always reassuring to have investments that consistently raise their dividends.
And that's all the news we have for you today. Thank you for joining us.
Thank you, Jim. Have a great evening, everyone.
Moving on to some blue-chip investment-grade business development companies, BDCs, we have Blue Owl Capital Corporation and Blackstone Secured Lending Fund. These stocks are definitely worth checking out for investors looking for a safe option. You can find more information on OBDC and BXSL stocks if you're interested.
That's right, Jim. Now shifting gears to Goldman Sachs, their focus on investment banking and trading, as well as their expansion activities, are likely to support their growth. However, it's important to note that they are facing challenges in the form of elevated costs and volatile client activity levels.
And finally, we have some positive news for Blue Owl Capital Corporation. They have delivered a strong total NAV return in Q3, further solidifying their impressive performance. This makes OBDC stock a promising choice for investors in our income portfolios.
Thanks, Jim. Those were some important updates for investors to consider. Stay tuned for more news and analysis in the financial world.
Our fourth story today is about Goldman Sachs. The investment bank's focus on IB and trading, along with business expansion activities, is expected to support the company's growth. However, there are concerns about elevated costs and volatile client activity levels.
Absolutely, Jim. While Goldman Sachs is expected to benefit from its focus on investment banking and trading, there are challenges to overcome. The company needs to manage costs efficiently and navigate the unpredictable nature of client activity to maintain its growth trajectory.
And finally, let's talk about Blue Owl Capital's strong performance. In the third quarter, they delivered a plus 3.6% total NAV return. This makes OBDC stock an attractive option for income portfolios.
Indeed, Jim. Blue Owl Capital's strong performance in Q3 is certainly impressive. With a positive total NAV return, this stock remains a buy for income-focused investors who are looking for reliable returns.
AAR Corp is AR. AAR Corp is engaged in providing products and services to aviation, government, and defense market. It operates in two segments, namely aviation services and expeditionary services. The aviation services segment consists of aftermarket support and services businesses that provide spares and maintenance support for aircraft operated by its commercial and government/defense customers. The expeditionary services segment consists of businesses that provide products and services supporting the movement of equipment and personnel by the U.S. Department of Defense, foreign governments, and non-governmental organizations. It generates a majority of its revenue from the aviation services segment.
AAR Corp is AR. The AAR Corp stock is seeing an upward trend for a few reasons. Firstly, the company recently launched its 2023 ESG summary report, demonstrating its commitment to environmental, social, and governance efforts. This reflects positively on the company's reputation and attracts investors interested in sustainable and responsible business practices. Additionally, AAR Corp has earned the 2024 Military Friendly Gold Employer and Military Friendly Supplier Diversity designations, highlighting its support for military personnel and veterans. This recognition enhances the company's credibility and potentially generates increased business opportunities. Moreover, AAR Corp's stock reached a new 52-week high, indicating strong investor confidence in the company's performance and growth prospects. Trading at higher levels suggests positive market sentiment and potential future gains. Overall, the combination of the company's ESG initiatives, recognition as a military-friendly employer, and positive market sentiment has contributed to the increase in AAR Corp's stock value.
AAR Corp is AR. The given articles do not provide explicit information about why AAR Corp's stock ticker is going up.
PGT Inc. is PGTI. PGT Innovations Inc. is a leading manufacturer of impact-resistant aluminum and vinyl-framed windows and doors and offers a broad range of fully customizable window and door products. The company distributes products through multiple channels, including window distributors, building supply distributors, window replacement dealers, and enclosure contractors. The products are sold through authorized dealers and distributor networks in the states of the Caribbean, Florida, Canada, and in South and Central America. But the majority of its revenue is generated from Florida.
PGT Inc. is PGTI. PGT Innovations Inc. PGTI stock has been experiencing an upward trend due to several factors. Firstly, the company was recently bestowed the Top 10 Executive Team Award by On Conferences during its 2023 OnCon Icon Awards, which reinforces its reputation as an industry leader in fenestration and garage door solutions. Additionally, PGT Innovations announced the appointment of Craig Henderson as Chief Financial Officer, signaling the company's commitment to strong financial management and growth. The company's expansion into new markets and geographies, as well as the announcement of a new glass company, customer base, and facility in Virginia, further demonstrates its focus on customer-centric innovation. Furthermore, PGT Innovations' share price hit a new 52-week high, indicating positive investor sentiment and confidence in the company's prospects. Overall, these factors contribute to the increase in PGT Innovations stock.
PGT Inc. is PGTI. PGT Inc. PGTI stock is expected to produce exceptional returns due to its solid growth attributes. The stock has surpassed the 20-day simple moving average, which is a positive sign for investors. The company's strong performance and potential for further growth are reasons driving the stock's upward momentum. Additionally, PGTI has outperformed its sector so far this year, indicating its superiority within the industry. Overall, the positive growth trends and performance metrics make PGTI an attractive investment option.
HCI Group Inc. is HCI. HCI Group Inc. is primarily engaged in the property and casualty insurance business through two Florida-domiciled insurance companies, Homeowners Choice Property and Casualty Insurance Company, HCPCI, and TypeTap Insurance Company, TypeTap. Both HCPCI and TypeTap are authorized to underwrite various homeowners' property and casualty insurance products and allied lines business in the state of Florida and other states. The operating segments of the group are HCPCI Insurance Operations, TypeTap Group, Real Estate Operations, and Corporate and Other. It derives key revenue from the HCPCI Insurance Operations segment.
HCI Group Inc. is HCI. The stock of HCI Group Inc., NYHCI, has been increasing due to several positive factors. One reason for the stock's rise is the announcement that its insurance subsidiary, Homeowners Choice Property and Casualty Insurance Company, has assumed over 53,000 policies from Citizens Property Insurance Corporation. This acquisition of policies indicates growth and expansion in HCI Group's insurance business. Additionally, HCI Group received recognition from Gartner as a leader in the 2023 Magic Quadrant for Distributed Hybrid Infrastructure. This recognition highlights the company's cloud-native infrastructure offerings, which can be deployed and operated based on customer preferences. Such recognition boosts investor confidence in HCI Group's technology services segment. Furthermore, Wasatch Advisors LP, a prominent institutional investor, increased its holdings in HCI Group, Inc. during the second quarter, indicating investor confidence and support. The overall positive financial performance of HCI Group, including its pre-tax income of $20.1 million and diluted earnings per share of $1.34 in the third quarter of 2023, also contributes to the stock's upward trend. These various factors, including business expansion, industry recognition, investor support, and strong financial performance, have led to the increase in HCI Group Inc. stock.
HCI Group Inc. is HCI. The stock price of HCI Group Inc. HCI is showing signs of growth due to several key factors. These include improving premiums, steady policy life expectancy, investment in technology, and a solid capital position. HCI's subsidiary, Homeowners Choice Property and Casualty Insurance Company, has successfully assumed a significant number of policies from Citizens Property Insurance Corporation, which represents a substantial in-force premium. Additionally, HCI Group's positive earnings estimate revisions indicate further potential for stock price appreciation.
CVRx Inc. Common stock is CVRx. CVRx Inc. is a commercial-stage medical device company focused on developing, manufacturing, and commercializing minimally invasive neuromodulation solutions for patients with cardiovascular diseases. Its proprietary platform technology, Barostim, is designed to leverage the power of the brain to address the imbalance of the autonomic nervous system, which causes heart failure and other cardiovascular diseases. Barostim provides baroreflex activation therapy, which in turn triggers an autonomic response to the heart. The majority of revenue is derived from the USA market.
CVRx Inc. Common stock is CVRx. The stock of CVRx Inc., CVRx, has been going up for several reasons. Firstly, analysts at William Blair raised their earnings per share (EPS) estimates for CVRx in Q1 2024, indicating positive growth expectations for the company. Additionally, CVRx recently reported strong financial and operating results for the third quarter of 2023, which may have positively influenced investor sentiment. Furthermore, the Centers for Medicare and Medicaid Services, CMS, increased outpatient payment for the Barostim implant procedure, a product offered by CVRx. This development could contribute to increased revenue and profitability for the company. Finally, CVRx beat expectations in their quarterly earnings report, reporting higher earnings per share compared to the consensus estimate. Overall, these positive performance indicators and market developments likely contributed to the upward movement in CVRx's stock.
CVRx Inc. Common stock is CVRx. CVRx Inc. CVRx is experiencing recent price strength, making it an attractive choice for investors. The company is a commercial-stage medical device company that focuses on developing innovative neuromodulation solutions for patients with cardiovascular diseases. CVRx announced that its management team will present at the 35th Annual Piper Sandler Healthcare Conference, generating interest in the stock.
MoneyLion Inc. is ML. MoneyLion Inc. is a mobile banking and financial membership platform that empowers people to take control of their finances. It is a full-service digital platform to deliver mobile banking, lending, and investment solutions. The firm offers a personalized, all-in-one, digital financial platform that provides convenient, low-cost access to banking, borrowing, and investing solutions tailored for its customers, rooted in data, and delivered through its proprietary technology platform.
MoneyLion Inc. is ML. The MoneyLion Inc. stock is going up for several reasons. Firstly, the company reported record revenue of $110 million in the third quarter, representing a 24% year-over-year increase. Additionally, MoneyLion achieved a net income before other expense and income taxes of $1 million compared to a loss in the same period last year. The company also reported a record-adjusted EBITDA of $13 million. These positive financial results have likely contributed to the stock's upward movement. Furthermore, the transactions of CFO Richard Correa and CEO Diwakar Chube selling shares of the company's stock indicate confidence in its future prospects.
MoneyLion Inc. is ML. MoneyLion Inc. ML stock is experiencing an upward trend for a few reasons. Firstly, it is seen as a fundamentally strong stock, aligning with a shorter-term investment strategy. Additionally, ML has gained significant momentum recently, while still maintaining a reasonable price, making it an attractive choice for investors. Furthermore, ML is part of a group of stocks identified by Zacks as potentially benefiting from a less hawkish Fed, upcoming holiday season, and favorable U.S. economic growth. which could lead to increased small cap investing. Overall, these factors contribute to the positive outlook and price growth of ML stock.
What is the product name of Lifeway Foods Inc., ticker LWA? Lifeway's flagship product is kefir. Lifeway sells it in several varieties, including low-fat, non-fat, Greek, organic, and low-carb varieties, as well as these in several different flavors. What do they sell from Lifeway Foods Inc.? Takeaway. They are a leading U.S. supplier of kefir and fermented probiotic products to support the microbiome. What does Lifeway Kefir from Lifeway Foods Inc. do? The benefits of these good bacteria may include supporting immunity and a healthy digestive system. The probiotics in kefir may help support a healthy gut, where 70 to 80% of the cells that make up the immune system are located. Why Lifeway Kefir of Lifeway Foods Inc., ticker LWAY, so special? Lifeway Kefir is a tart and tangy cultured milk smoothie. It's high in protein and calcium and has 12 live and active probiotic kefir cultures. Review of Lifeway Kefir of Lifeway Foods Inc. ticker. It tastes a lot like yogurt. I don't like plain yogurt, so I always added fruit to my kefir. This kefir is much thinner and sweeter than homemade kefir. It has a lot of added sugar, which is disappointing because I really wanted to buy this regularly, but I try to avoid added sugars. Lifeway Foods Inc. is about what? Lifeway Foods Inc., ticker LWY, is a publicly held company, NASDAQ symbol LWA, based in Morton Grove, IL, USA. Lifeway's product lines are devoted to specialty dairy foods for health-conscious consumers, including probiotic cultured products and functional foods. Which industry is Lifeway Foods Inc., ticker LWN? Lifeway Foods is an Illinois-based health food company founded in 1986. They are a leading U.S. supplier of kefir and fermented probiotic products to support the microbiome, who are competitors of Lifeway Foods Inc. Lifeway Foods competitors and similar companies include Yame Group Holdings, Vigor, Nutrafood, and Sadafco. Lifeway Foods is a manufacturer of delicious kefir, a probiotic-rich fermented milk smoothie, and other cultured dairy products. The product name of Lifeway Foods Inc., ticker LWY, is Lifeway Kefir. They primarily sell kefir, which is a tart and tangy cultured milk smoothie. Lifeway sells kefir in various varieties, including low-fat, not Greek, organic, and low-carb options, as well as in different flavors. Lifeway Foods is a leading U.S. supplier of kefir and fermented probiotic products that support the microbiome. Kefir, being rich in probiotics, has various potential health benefits, such as supporting immunity and a healthy digestive system. The probiotics in kefir can help support a healthy gut, where a significant portion of the immune system is located. Lifeway Kefir stands out for being high in protein and calcium and containing 12 live and active probiotic kefir cultures. However, some reviewers mention that the kefir is thinner and sweeter than homemade kefir and may have a higher sugar content, which may not be desirable for those who prefer to avoid added sugars. Lifeway Foods Inc., based in Morton Grove, IL, is a publicly held company listed on the NASDAQ Stock Exchange under the ticker symbol LWA. Lifeway's product lines specialize in specialty dairy foods for health-conscious consumers, including probiotic cultured products and functional foods. In terms of industry, Lifeway Foods operates in the health food industry, specifically focusing on producing and selling kefir and fermented probiotic products. They are recognized as a leading supplier of these products in the United States. Some competitors and similar companies to Lifeway Foods Inc. include Yame Group Holdings, Vigor, Nutrafood, and Sadafco. These companies also operate in the manufacturing and distribution of dairy and probiotic products.
Lifeway Foods Inc. is LWA. Lifeway Foods Inc. is engaged in manufacturing probiotic, cultured functional dairy health food products. Its primary product is drinkable kefir, which is a cultured dairy product. Its product categories are drinkable kefir, which is the key revenue-driving product, European-style soft cheeses, cream, ProBugs, frozen kefir, and other dairy. The company manufacture and market products under the Lifeway and Freshmade brand names, as well as under private labels on behalf of customers. It sells the products primarily through direct sales force, brokers, and distributors.
Lifeway Foods Inc. is LWA. Lifeway Foods Inc. stock is experiencing an increase primarily due to positive news and developments surrounding the company. Some potential reasons for the stock's rise include 1. Strong earnings. Lifeway Foods is scheduled to release its third quarter 2023 financial results, and investors may have high expectations for positive earnings. 2. Analyst upgrades. The company has received upgrades from analysts, such as Noble Financial, who raised their rating from market perform to outperform. Such positive evaluations can boost investor confidence. 3. Increased short interest. Another potential factor is the growing short interest in Lifeway Foods stock. This indicates that some investors may be betting on the company's performance, potentially contributing to increased demand. 4. Positive market sentiment. Consumer defensive stocks, including Lifeway Foods, are trading higher in general. Positive market sentiment towards this sector might be driving increased interest in Lifeway Foods stock. It's important to note that stock prices can be influenced by various factors, and that investors should conduct their own research and analysis before making any investment decisions.
Lifeway Foods Inc. is LWI. Lifeway Foods Inc. LWI is experiencing a surge in its stock price, likely due to its recent positive performance and attractive fundamentals. The company passed through a shorter-term trading strategy-based screen, making it appealing to shorter-term investors capitalizing on price trends in fundamentally sound stocks. The specific reasons for the stock's upward movement are not mentioned in the given information.
Some of the competitors of Heritage Insurance Holdings, Inc. include 1. Universal Insurance Holdings, Inc. 2. HCI Group, Inc. 3. Federated National Holding Company. 4. United Insurance Holdings Corp. 5. People's Trust Insurance Company. These companies also operate in the property and casualty insurance industry and offer similar products and services. Some of the competitors of Heritage Insurance Holdings, Inc. in the property and casualty insurance industry include 1. Universal Insurance Holdings, Inc. 2. Federated National Insurance Company. 3. HCI Group, Inc. 4. American Integrity Insurance Company of Florida. 5. United Insurance Holdings Corp. 6. Bankers Insurance Group, Security First Insurance Company. 8. Avatar Property and Casualty Insurance Company. 9. Tower Hill Insurance Group. 10. Florida Peninsula Insurance Company. These companies also offer various types of property and casualty insurance policies and compete with Heritage Insurance Holdings, Inc. in the market.
Heritage Insurance Holdings Inc. is HRTG. Heritage Insurance Holdings Inc. is a regional property and casualty insurance company that offers a variety of personal and commercial insurance products. Through its subsidiaries, Heritage Property and Casualty Insurance, Narragansett Bay Insurance, and Zephyr Insurance, the company issues personal residential property insurance in more than 10 states in the United States. It also offers commercial residential insurance primarily for its Florida properties. Heritage Insurance manages insurance underwriting, customer services, actuarial analysis, distribution, and claims processing internally.
Heritage Insurance Holdings Inc. is HRTG. Based on the given news articles and reports, the reasons why Heritage Insurance Holdings Inc. stock is going up are as follows. 1. Improved financial performance. Despite experiencing losses in the third quarter of 2023, Heritage Insurance reported improved financial performance. This positive performance could have contributed to the increase in the stock price. 2. Positive earnings expectations. Analysts anticipated that Heritage Insurance would post earnings of $0.29 per share for the quarter. If the actual earnings surpassed these expectations, it could have driven up the stock price. 3. Price target upgrade. Truist Financial raised its price target on Heritage Insurance stock from $7 to $9. Positive price target upgrades from analysts often lead to increased investor confidence and can drive up stock prices. It's important to note that these reasons are based on the given information, and other factors may also be influencing the stock's performance.
Heritage Insurance Holdings Inc. is HRTG. Based on recent analyst ratings, Heritage Insurance Holdings Inc. HRTG has received mostly bullish and somewhat bullish ratings within the last quarter. These ratings suggest positive sentiment towards the stock. Additionally, the average price target provided by these analysts is $6.76, indicating a potential downside from the current price of $7. However, it is important to note that these ratings and price targets may not fully explain why the stock is going up. Additional factors, such as positive financial performance, market trends, and investor sentiment may be contributing to the stock's upward movement.
Graham Corporation is GHM. Graham Corporation manufactures and sells critical equipment for the energy, defense, and petrochemical industries, based with emphasis on the United States. Its suite of products includes ejectors, surface condensers, turbopumps, compressors, and liquid vacuum pumps, among others. For the defense industry, its equipment is used in nuclear propulsion power systems for the U.S. Navy. For the chemical and petrochemical industries, its equipment is used in fertilizer, ethylene, methanol, and downstream chemical facilities. The company derives key revenue from the sale of heat transfer equipment. It derives revenue from the U.S. and other countries.
Graham Corporation is GHM. The Graham Corporation stock is going up due to several reasons. Firstly, the company recently announced receiving $110 million in orders in October 2023, which includes follow-on orders for critical U.S. Navy programs. This is a significant achievement and indicates strong demand for Graham Corporation's products and technologies in the defense and space industries. Additionally, the company is a global leader in the design and manufacture of mission-critical fluid, power, heat transfer, and vacuum technologies for various industries. This expertise and reputation contribute to its consistent growth and increased investor confidence. Furthermore, Graham Corporation is scheduled to release its second quarter 2024 financial results, indicating positive expectations for its performance. Investor anticipation of positive outcomes from this announcement may also be driving up the stock price. Overall, the combination of large orders, strong market position, and positive outlook are likely factors contributing to the upward movement of Graham Corporation's stock.
Graham Corporation is GHM. The Graham Corporation stock, ticker GHM, is going up due to its fundamentally sound business and positive price trend. It has recently reached a 52-week high, indicating strong investor interest. Additionally, GHM passed through a shorter-term trading strategy-based screen, making it an attractive choice for shorter-term investors. While weakness in the manufacturing sector and low demand environment pose challenges for the industry, GHM's improving supply chains are expected to support its near-term prospects.